Hello, great selves. So today we'll be doing cash flow. So now required, we have our ordinary share capital, which is node number 7. We also have node number 8 by the name of retained income. So given information here, information C, we have the share capital. So on 1st October 2016, at the beginning, the company had issued out 800,000 shares. And then on 1st January 2017, additional shares were in issue at 9 Rand 80 per share. Therefore, on 30 June 2017, the company decided to repurchase 120,000 shares. However, the closing balance compromised 880,000 ordinary share capital. So now we need to complete our ordinary share capital, which is node number 7. So given our adjustment, on the balance sheet section account, you have the 2 months there given as 30 September 2016 as well as 30 September 2017. So when you look under ordinary share capital, on 2016, you had an unknown amount, meaning it's a balancing figure at the beginning. So you have your balance at the end given as 8,412,000. So here, on the value of your ordinary share capital, our value at the end will be 8,412,600 is given under our balance sheet. Remember, the company at the end of our counting period issued out 880,000 shares. So at the end, we had 880,000 shares. And on 30 June 2017, the company decided to buy back. So we had 120,000 shares bought back from maybe a deceased shareholder. Therefore, our additional shares are not given. So meaning our additional shares, it's a balancing figure. So now what you need to do is to take 880,000 shares plus 120,000 as our buyback, and then you subtract your 800,000 to get additional share capital of 200,000. So during the financial year, the company issued out 200,000 shares at 9 Rand 80 per share. So now to get the amount or value of these shares issued during, you will take 200,000 multiplied by 9 Rand 80. So the value of shares issued will be 1,960,000. Right. So now remember our balance at the beginning. Balance at the beginning, it's unknown. You also have a buyback. Also, it's unknown. So now you need to get an amount of repurchased here to get a balance at the beginning. So remember, when you calculate the value of shares bought back or repurchased, the value is going to be its value over a number of shares. So now our value, its value at the end on ordinary share capital. So it's 8,412,600. You divide by the number of shares issued at the end, which is 880,000. So meaning our average price, AVP, our average price will be 9 Rand. So it's 9 Rand 56. So our average price, it's gonna be 9 Rand 56. So meaning these shares, 120,000 were bought back at 9 Rand 56 on average price. So to get the total value of shares bought back under ordinary share capital, you will take 120,000, you multiply by 9 Rand 56, you will get an amount of 1,147,200. So now we have our balance at the end sorted. Then we have an amount of shares bought back. You also have additional shares issued during. So now our balancing figure, it's balanced at the beginning. So what you do on your left hand side, you do also on your right hand side. So now you will take your balance balance at the end, right? You will add an amount of shares bought back. There also you subtract issued during. So it's 8,412,600 plus 1,147,200. You subtract your 1,960,000. So now our value at the beginning for ordinary share capital will be 7,600,000. So now you have your ordinary share capital note. Right. So let's move. Um, balance at the beginning on retained income. Also, your balance at the beginning for retained income, it's unknown, meaning it's a balancing figure. And then you have your net profit after tax. So your net profit after tax will be given under income statement, which is when you check information, you have an extract from the income statement issued out on 30 September 2017. So now, what you are looking for is net profit after tax. So now you have your net profit after tax as 733,600. So net profit after tax is given as 733,600. Therefore, buyback of shares. Remember, the company decided to buy back 120,000 shares, right? Thereafter, you were told that the 120,000 shares, each share you will pay how much? 10 Rand, right? Therefore, remember our average price when you calculated the AVP, it was 9 Rand 56, right? So average price, it's recorded under note number 7. However, the 10 Rand, it's under cash flow. Therefore, you need what you call the above. So you need to calculate the above average. So now, how do you then calculate to above average? Above average, it's going to be 10 Rand minus 9 Rand 56. So now your calculation here will be 120,000 multiplied by open brackets, right? 10 minus 9,56. So meaning your amount for buyback under ordinary share, under retained income, it's going to be, so it's 24,000. So on your retained income under buyback, the company will pay an amount of 24,000 for retained income. Right. Therefore, interim for dividends, you have your interim dividend and also your final dividend. Remember, final dividend stands for shareholders for dividend issued at the end. So when you check under balance sheet, you have your two shareholders for dividends. There's 320,000, which is that 320,000. It's what? It's paid at the beginning, right? This is paid. However, 264,000, it was declared. So meaning you have your final dividend of 264,000 as declared. So now balance at the end or shareholders for dividends at the end, it is classified as your final dividend. So now, meaning our final dividend, it's going to be 264,000. So you have your final dividend amounted to 264,000. And then, so now you have dividends, total dividend for the year amounted to 514,000. So now you have your total dividend, meaning total, remember our total consists of interim plus final. So now that 514,000, there's an amount for interim dividend as well as an amount for final dividend. So now here written dividends, you will put 514,000, right? Remember that 514,000 consists of interim plus what? Plus final. So to get an amount for interim dividend, you will subtract 514,000 minus 264,000. So now our interim dividend will be 250,000. So an amount paid to our shareholders for interim dividend, it's gonna be 250,000. So now remember, our balance at the beginning for retained income was a balancing figure, right? So we had an amount of unknown that you need to calculate for interim, for retained income note, which is your balance at the beginning. So again, every time when there's balance at the beginning as unknown, you use your what, your bottom up. So meaning our bottom up, it's gonna be our balance at the end, that 386,600, you will combine it by 514,000. So it's gonna be 386,600. You will add your 514,000, and remember again, there's that 24,000. So you add again that 24,000. Therefore, you subtract net profit what? Net profit after tax. So now our balance at the beginning for retained income, it's going to be 191. So it's 191,000. Right. So it's 191,000. Right. So 4.2.2, you need to calculate the following amounts to be used in your cash flow statement. Use bracket to indicate whether the amount will be an outflow cash or an inflow cash. So every time when you see paid purchase under cash flow statement, it's regarded as an outflow. So meaning it's money out. So when you receive money or you have the bank overdraft, those two effects will be regarded as an inflow. Therefore, you need to calculate your dividends paid at first. Also, you calculate your income tax paid, change in fixed deposit, and then change in your loan. Right. When we look again on our next page, you have the information, right? So now the question was for you to calculate your dividends paid. So now dividends paid, the format, it's balance. So it's balance at the back, meaning balance at the beginning. And then you have your total dividends, right? Remember, our total dividends, it's interim dividend plus final dividend. So our total dividend consists of interim dividend plus final dividend. Then now you would close your dividends paid with balance at the end, right? So now remember, dividend is an amount paid to shareholders. So when you calculate dividends paid, you need to check your shareholders for dividends. So 2016 September, our shareholders for dividends at the beginning amounted to 320,000. So now that 320,000, remember I said it was paid last year. So that is why our 320,000 will be bracketed. It was paid. So whenever you pay someone or something under cash flow statement, it's regarded as an outflow. Again, our total dividend, it's in bracket, same situation, it's an outflow. So now we have this information here. Right. Total dividends for the year amounted to 514,000. Remember, our total dividend that consists of interim plus final dividend amounted to so our total dividend amounted to 514. So it's 514,000, right? Therefore, so now you need to check your shareholders for dividends at the end. Our shareholders for dividends at the end under balance sheet, it was 264,000. So remember, our balance at the end, it's final dividend, it's declared. That 264,000, it is not yet been paid. So now your 264,000 will be positive because it's a liability. So now you will have positive 264,000. So meaning our dividends paid amount. So now our dividends paid, when you calculate the dividends paid amount will be 570,000. So dividends paid, it's gonna be 570,000. And remember, guys, to include your brackets because dividends paid, it's an outflow, right? Therefore, the next question was for you to calculate taxation paid. The easiest way to do your tax or your taxation paid under cash flow statement is for you to do a ledger instead of a note. So now you will have your SARS income tax here as a ledger. Remember, credit side stands for liabilities. So on the credit side, you will record all your liabilities that affect your SARS income tax. However, on the debit side, you record assets. So every time you pay SARS, SARS will decrease on the debit side. The reason why we're saying on the debit side, you will record all your assets, meaning bank. Therefore, on 30 September 2016, SARS income tax was on the debit side. So now here it's balance brought down. So meaning your opening balance was on the debit side amounted to 31,000. So you will record 31,000 on the debit side as your opening balance. However, income tax always it's on the credit side. So when you do the ledger for SARS income tax, your income tax always it's on the credit side because income tax it is a liability to the company. So now your income tax it's given as 314,400. So our income tax is given like that. However, 30 September 2017, you had the balance of 22,300, which was what was credited. So now before that balance, remember our balance here was credited, right? So it's going to be balance brought down. So meaning it's balance at the end. So now it's 22,300. Before that balance was brought down, you will first say balance what? Carried down. It's going to be 22,300, right? Then after your equal sign here, therefore, you will record where on your credit side as balance brought down, which is 22,300. Then now what you do or what you need to do is to check which side it's greater than the other. So now you have your 314,400 on the credit side. So meaning our credit side it's greater than our debit side. Our total it's gonna be 314,400. And then here also it's gonna be 314,400. So now to get your taxation paid, right, to get your what? Your taxation paid, you will take 314,400, you subtract your 22,300, also you subtract your what? Your 31,000. So meaning our taxation paid, it's gonna be 261,100. That's how you do your taxation paid with your ledger. Now you also have another way of calculating your taxation paid according to your Minder gap. So now remember, when you do SARS as a note, it's gonna be balance, right, at the beginning for tax. You also have here, it's gonna be what? Income tax. So now you have your income tax, and then also you have balance at the end. Right, so you have your balance at the end. So now, so remember our balance at the beginning for SARS was on the debit side. So again, another way of doing this SARS income tax in a simpler way, you will say uh, DR. Yeah, so it's DR versus CR. And also here on your balance at the end, it's gonna be DR versus CR. Now check. Whenever your balance it's on the debit side, it's what? No bracket, right? Therefore, if your balance at the beginning it's on the credit side, it means what? Bracketed. And then when you do your balance at the end, it's vice versa. So meaning your balance at the end, if it's on the debit side, it means what? It means bracket. And then balance at the end, if it's on the credit side, it means what? It means no bracket. Then now our balance at the beginning was on the debit side, which was what? It was 31,000. So according to the rule, our balance, if ever it's on the debit side, it means what? No bracket. It means that it's an asset. And then income tax, always remember your income tax, it's a liability. So sign of a liability, it's represented in brackets. So meaning our 314,400 will be what? Bracketed, right? And then you also had the balance of 22,300. It's on the credit side. So again, you check your rule. Remember, our CR, it's what? No bracket. So meaning our 22,200 will be positive. So it's going to be positive 22,300. So when you punch these figures under your calculator, you will take 31,000, you subtract 314,400. Thereafter, you add your 22,300. Surely you will get a negative amount of 261,100. Do not panic whenever you get a negative amount, I meant. So a negative amount of 261,100, because remember, taxation paid, it's an outflow. So meaning you will pay SARS an amount of 261,100. Right. So now again, I repeat, the easiest way for you to calculate your taxation paid, it's for you to do the ledger instead of the note. Right. It's now our next question was for us to get our change in fixed deposit. So now, so fixed deposit, it depends whether it increases or it decreases. So now let me write this first. So it's gonna be increase, yeah. So it's increase and what? And decrease. Increase or decrease in what? In your fixed deposit. So it's either fixed deposit, financial assets, or investment. So now it's change. Fixed deposit. Right. Now, if your fixed deposit increased, it means your fixed deposit will be what? An outflow, right? However, if your fixed deposit decided to decrease, it's now what? It's inflow. It means fixed deposit matured. A portion, you received a portion of your money from your bank or somewhere. So if your fixed deposit decided to decrease, it's regarded as an inflow. However, now fixed deposit under balance sheet 2016, your fixed deposit was 120,000 given here. Thereafter 2017, your fixed deposit was 80,000. So now from 120,000 to 80,000, it means your fixed deposit now decided to what? To decrease. So meaning your fixed deposit, it's an inflow. So when you do your calculation, it's 120,000. The change, remember, we are calculating the change effect for fixed deposit. So it's gonna be 120,000, and then you minus 80,000. So meaning our fixed deposit, the change of our fixed deposit, it's gonna be what? 40,000, right? Remember to indicate that 40,000, it's what? It's inflow, because your fixed deposit decreased. So every time when you calculate the change effect of your fixed deposit, first things first, you need to write this so that you know if ever if your fixed deposit decided to increase, it means outflow. However, if your fixed deposit decreased, it means inflow, so it's money in. So now another question was for you to calculate your change in loan. So it's either loan or, so it's change in loan, or it's change in what? Non-current liabilities, right? So again, your loan, you also have this, it's increase or decrease. So now, once you understand the concept of fixed deposit, it's a vice versa of your loan. So now remember, if your fixed deposit increased, it means outflow. So meaning your loan, if decided to increase, your loan will be what? Now it's inflow. And then if you see a decrease in your loan, it's gonna be what? An outflow. It means the business decided to reduce the loan. Therefore, September 2016, also September 2017, your loan on 2016 amounted to 950,000, right? So on 2017, the loan was what? 1,250,000. So it means your loan decided to what? To do an increment. So now your calculation will be 1,250,000 minus 950,000, right? So the change in your non-current liabilities will be 300,000. Again, remember to indicate that this 300,000 will be your inflow. So it's inflow. So now to calculate the cost or additional equipment purchased, the formula will be carrying value. It's carrying value at the beginning, and then here it's gonna be additional or additions at cost, followed by disposal at carrying value, and then after it's depreciation, and then your last figure will be carrying value at the end. So our depreciation, it's in bracket because it's an expense. Disposal also, it's in bracket, right? Now, again, when you check your balance sheet, 2016, carrying value at the beginning was 8,410,800. So we had our carrying value at the beginning given as 4,810,000. However, on 2017, your carrying value at the end was 9,806,000. Right. So now our carrying value is 9,806,000. So followed by what? By depreciation. So again, our depreciation, it's given here on income statement. So we had an amount of 510,000 as depreciation, right? So our depreciation is 510,000. However, your disposal and carrying value, right? So fixed assets, extension to the warehouse were completed at cost of 1,800,000. Guys, remember our additions at cost. You you have three tangible asset, right? So our tangible asset, remember, it's what? Land and buildings and what? Vehicles. And your last one will be equipment. So now this activity, there's no vehicles here. So meaning our vehicles, it's zero. Therefore, landed buildings, extension to the warehouse. So you decided to extend your warehouse that costed you 1,800,000, right? So the question was for you to calculate the cost or the additional cost of equipment purchased. So meaning our cost for equipment will be the what? The balancing figure. And therefore, equipment at carrying value, 440,400 was disposed. So meaning we have our disposal at carrying value, which was 440,400, right? And then again, our additions at cost will be balancing figure. Now remember, our balancing figure, you start from the bottom upwards. So it's gonna be 9,804,000. You add depreciation of 510,000. You also add your disposal. And thereafter, you subtract your carrying value at the beginning. So it means our additions at cost will be 2,345,600. So our additions at cost amounted to 3,245,000. So in simple terms, these two assets, right, will cost you 2,345,000. So it means under 2,345,000, you have the cost of what? Land building, and also the cost of your what? Your equipment, right? So remember, our cost for land buildings was 1,800,000. The question was for you to calculate the additional amount for equipment. Therefore, it's gonna be here 2,345,600. You subtract 1,800,000. So meaning our cost for equipment, what? It's gonna be 545,600. So our cost for additional equipment board was 545,600. Right. Then the next question is for you to match your columns. So column A, column B. So column A, to what extent does the business rely on your borrowed funds? So meaning here, so your answer for 4.1.1, it's going to be what? D. That's a risk or gearing ratio. Therefore, can the business pay all its debts? That's solvent. So our answer for 4.1.2, it's going to be B. And then for 4.1.3, our answer is going to be A. It's liquidity. So our answer, it's A. Therefore, complete the net change in cash and cash equivalents of the cash flow statement. Okay, so when you check our cash flow statement, you have the net change in cash and cash equivalents. So now it's net change, right? So now cash and cash equivalents at the beginning, and then you have cash and cash equivalents at the end. So the question is for you to calculate the net change, the change effect for your cash and cash equivalents, right? So now, so it's open bracket here and also here. This it's 2016 because it's at the beginning. Then this is 2017, meaning it's our balance at the end. So now, again, on your balance sheet, cash and cash equivalents at the beginning, 2016. it was 98,500. So now you would put 98,500 here, and 2017, it's 2,500. Right. Thereafter, you check your bank overdraft. So now our bank overdraft 2016 was what? Was zero. So meaning here it's 98,500 minus zero. That means our balance at the beginning it's gonna be 98,500. There was no change at the beginning for your balance of 98,500. Then bank overdraft 2017, your bank overdraft amounted to 65,300. So you will subtract your 65,300. So here there was a change at the end, which is from 2,500. You had a balance of 2,500, and then you decided to do an overdraft of 65,300. That means now you will have a negative balance of 62,800. So this 62,800, it is what? It is your bank overdraft. Remember, I said your bank overdraft on cash flow statement, it is classified as an inflow. So when you calculate the total for net change, when you calculate the total for net change in cash and cash equivalents, it's gonna be 98,500. You will add 62,800. The reason why we add our bank overdraft, it's for us to get the total inflow for your cash and cash equivalent. So every time, whenever there's a bank overdraft, you add. So now the reason why I'm saying 98,500, you will add 62,800. So when you combine these two amounts, you will receive 161,300 as part of what? Of your inflow. So now you will have the total inflow of 161,300. Right. So that's how you do your cash flow statement. Danko.